United Airlines stock could get wobbly as United Airlines deals with high fuel costs. United Airlines stock appears to be trading at an attractively low valuation. On the other hand, United Airlines and other carriers face a slew of risks issues. Investors might choose to take a moderately sized share position in United Airlines stock. Let's dive in. Here's why risk-taking value hunters should look at this airline stock. Welcome to Timely Investment Research. When a famous firm's price-to-earnings ratio gets very low, do you just go ahead and buy the stock? That's a question that value seekers will need to ask themselves if they're considering United Airlines stock. It might be cheap for a reason, as the old saying goes. It's not United Airlines' fault that the U.S. airline industry is facing major problems. Still, these headwinds will affect United Airlines and its shareholders. However, if risk-tolerant investors expect the company to overcome its issues, the market might eventually reward them for taking a chance on United Airlines. Is United Airlines stock trading at an irresistible valuation? Don't get the wrong idea here. All stocks involve risks, and United Airlines isn't going bankrupt anytime in the near future. Redburn analysts even gave United Airlines stock an upgrade from neutral to buy, along with an optimistic $80 price target. The $80 price objective might be too ambitious, but there's at least one reason to consider investing in United Airlines now. Specifically, the shares may be undervalued. On a generally accepted accounting principles measured, trailing 12-month basis, United Airlines' P/E ratio of 5.7x is much lower the sector median P/E ratio of 19.47x. United Airlines has price-to-sales and price-to-book ratios that are also below the respective sector medians. If these valuation metrics are important to your investment approach and strategy, then feel free to consider United Airlines stock. United Airlines risks. It's not just about oil. Our main point today is that traditional valuation metrics aren't the be-all and end-all of successful investing. You should also weigh a company's major risks and obstacles. United Airlines risks may be surmountable, but they're definitely considerable. First and foremost, United Airlines and other U.S. carriers must deal with elevated fuel costs. As the petroleum price rises, this will surely impact United Airlines' bottom line. Then there are other issues to bear in mind. United Airlines and other U.S. airlines are dealing with a shortage of pilots and air traffic control workers. Even beyond that, Third Bridge Global Sector Lead for Industrials Materials and Energy, Peter McNally, cited capacity as an industry-wide obstacle. McNally explained what he meant by the capacity problem. More planes are being put into service. Airlines have been aggressive in ordering, he said. These planes are being delivered. There's more supply of seats, and that's putting some downward pressure on fares here. Speaking of supply of seats, Reuters reported that United Airlines is facing a consumer antitrust class action lawsuit. This lawsuit accuses major U.S. carriers of conspiring to drive up domestic airfares by reducing the number of available seats. United Airlines stock gives investors a lot to think about. If you're buying a share position in United Airlines, you'll definitely need to conduct your due diligence first. There's a lot to consider, from United Airlines' apparently attractive valuation to high fuel costs, worker shortages, and more. And so, United Airlines is a big company with big problems, but maybe those problems have already been priced into the shares. Therefore, United Airlines stock is only appropriate for risk-tolerant investors who expect United Airlines to overcome the aforementioned obstacles. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.